If your company is doing R&D and you're capitalizing some of those costs on your balance sheet, you might be wondering, does that mean you can't claim the R&D tax credit on them? Good news, the answer is no. Capitalizing your R&D costs doesn't automatically lock you out of the credit, but there are some important rules you need to know. When we talk about capitalizing costs, we mean recording an expense as an asset on your balance sheet rather than running it straight through your P&L. This usually happens when a cost has a benefit lasting for more than a year. Think equipment, buildings, or internally developed software. So what capitalized costs can qualify? First, buildings. If you've constructed or refurbished a building that's used for R&D, there's a specific credit available under Section 766D. To qualify, at least 35% of the building's activities need to involve qualifying R&D over a 4-year window. One thing to flag, if you sell the building or stop using it for R&D within 10 years, the credit can be clawed back. So it's a long-term commitment. Second, plant and machinery. Equipment used for R&D can qualify, claimed under Section 766C, the same section as most other R&D costs. If the equipment is used for both R&D and non-R&D work, you need to apportion it fairly, for example, using machine hours. So what can't you claim? Well, intangible assets like patents, brand names, or capitalized software development costs are ineligible. Unfortunately, there's no provision in the legislation for these to be included in an R&D tax credit claim. But for costs that do qualify, there are a few practical things to keep in mind. Documentation is everything. You need to show that capitalized costs genuinely relate to qualifying R&D activity, so keep detailed project records. When you capitalize costs, they flow through your P&L slowly via an amortisation or depreciation over several years. But you can claim the R&D tax credit in the year the expenditure is actually incurred. That's a real cash flow benefit worth planning around. And finally, any costs covered by government grants or state aid won't qualify. Your accounting treatment, whether you capitalize or expense, doesn't determine whether you can claim the R&D tax credit. What matters is whether the spending was incurred in carrying on qualifying R&D. Check out the full blog for more details.